Yeah, it's really like, in the Russian crisis in the late 90s. But the big thing today is both the Fed and ECB have kept interest rates so low and easy money for so long that a country like Turkey has been able to accumulate $250 billion of dollar and euro denominated debt. So every 1% move lower in the lira is like a 5 billion lira interest coverage problem. So in other words, when you have that much dollar denominated debt, it's lights out. I mean, literally, there's no way that the country can come out of this.
So what happens? They have to take a bailout from the IMF, or what's next?
It'll be either it won't be the IMF. Argentina just went down that road, and they were very accommodative, and there was a lot of goodwill there. Turkey would have to go a Russian or a Middle Eastern route.
Why couldn't they go to the IMF? Because they're too big? I mean, their size rules or...
The relationship between Turkey and kind of the IMF and the global intelligentsia is not very solid right now.
Yeah, you could have said that about Argentina, too. What do you think, Tim? What does this mean for the broader markets?
Well, the big test will be next week to see if the markets can shrug off this. For the first 4 days of the week, the markets were pretty much left to trade on their own. It was a very light week for macro data, and there were very few high-profile corporate earnings, and stocks were doing very, very well. We were within a whisker of all-time highs on many of the major averages. So that will be to see how much of the contagion story gains any traction next week will be key for U.S. markets.
Rick, what's your take? Larry clearly saying there he doesn't think Turkey can get out of this.
Well, I'm not sure Turkey could get out of it either, but is that really what we're all worried about? No, I think that what we're really all worried about is how it affects the big markets, specifically the U.S. market. And I think Larry is absolutely correct. The unintended consequences of bad policy lasting too long from the world's central banks, as it comes off, or it's purportedly starting to come off, it's going to magnify every crack like a powerful microscope. And I don't see any way around that. But in the bigger picture, it doesn't really feel like 98 to me. It doesn't feel like any of those markets, because back then, we wouldn't have had the luxury to discuss how this crisis was going to turn out, because it was happening in the immediacy of the moment. And I think computer trading, to some extent, I know that it can be a liquidity buster, but I think it makes the pieces relocate and recalibrate much faster. So I think what we see now and today may have been the worst case scenario. What does it mean next? I would think the category I would be thinking about most is capital deployment. Emerging markets looked great for all the reasons Larry said, but the tide is turning, and bad governance, bad politics in these countries also figures in. But if you were an investor, the first thing you'd do is you'd buy treasuries or you'd buy bonds. The second thing you would do is probably take that cash out and deploy it in solid equity markets. I think this is going to end up being a positive for the U.S. markets, though probably not immediately, but over the course of several sessions.
Larry, just quickly, you're very bearish on Turkey, that's clear, but we had discussions earlier where guests suggested there's not the same risk of contagion across Europe and across the US. Do you agree with that, or you think we get a big pullback in US markets as and when Turkey goes for whatever bailout it needs to go for, if you're right?
So much money's gone into passive asset management that it's actually numb to these things, much more than it was in 2011. But there's definitely massive. Here's the big thing: the Trump administration, and I was in the kind of Trump camp before the election. I thought he would get elected, but now they've made some big mistakes here, because number one, they're throwing tariffs at China. At the same time, there are sanctions on Russia and Turkey. Now think about it; those are the Europeans' biggest trading, Germany's biggest trading partners, right? So they're going to basically put Europe in a recession. The banks are exposed to Turkey. You're talking about substantial bank credit risk that will eventually feed back to the U.S.